Thank you. Good afternoon, all of you, and thank you for joining this call. I hope you had a chance to download the investor presentation and press release that went a few minutes ago. Today we have allocated sufficient time to answer all the questions, considering that this is a very different and extraordinary quarter. So we thought that we will clarify whatever points that comes up in this meeting. Let me give you some background, and then we can go into questions. So somewhere in the month of February, I have friends in Singapore and Hong Kong from my previous companies. I was having a chat with one global head, and I was generally inquiring about what is happening in this whole coronavirus. He told me that the operations that he was managing in China and Shenzhen, only 5% of people are attending the office and the rest of the people are at home. And even in Singapore, they are steadily reducing the number of people coming to work. It is affecting business, it is affecting delinquency, it is affecting collection calling and so on. And I was thinking, this is looking really very difficult. Then you hear one or two instances of people testing positive in Kerala, some instances in Rajasthan. And then the last time I traveled by domestic airline was on 11th March. And the airport was hardly anybody. And then you had all these staff joking about coronavirus and why there is no crowd, etc. All hell broke loose 1 or 2 days later. And then we are faced with such an amazingly extraordinary situation, which is almost, impossible if not difficult to understand. So, from our point of view, we were doing well. We were building our deposit base quite well. For example, although I personally feel that comparing anything with last year or last quarter at this stage is because we are used to doing work like that. Otherwise, hardly there is any comparison possible. But having said that, if I look at our retail term deposit, which is less than 2 crore deposit, as compared to last year, we have grown 51% and reduced our top 20 to almost 8% in the last quarter in December. And we were well on our road to reduce it further. But the accessibility to customer, the whole situation was so much disrupted that, it was, fortunately we were able to trigger all our BCP. I don't know who plans for a pandemic like this, but still we were able to kind of deal with our BCP quite well. For example, 160 of our 260 call center employees handle calls from home thanks to technology. We have created multiple options for us to shift our treasury or any operations. So all this was done within a span of about 3-4 days as we were seeing this imminent lockdown after that Janata Curfew initiative of the government. So that is where we are. And then on 27th March, when moratorium was declared by RBI, there was, I must admit, sufficient amount of confusion and debate. We were directly told by the supervisor of RBI that in spirit, the moratorium is to be given to all retail customers. While the bank can do case by case on large ticket customer or corporate customer, as far as retail, the spirit of the announcement was for all to be given the option of moratorium. So while initially we put out this thing of opt-in for moratorium, later, 2 days later, we changed it to opt-out of moratorium. So in the spirit, we offered a moratorium to all our customer base except NBFCs, corporate and some of the large ticket, which anyway we have very little of large ticket. So I know that a lot of confusing statistics are given there in terms of some 5% moratorium to 70% moratorium and so on. It is difficult to figure out what exact moratorium is it, because there are customers who have taken the moratorium but paid. There are customers who have paid and then later said, maybe I need the moratorium, so take back money. So sometimes it's not easy to compute exactly. There is some little bit of percentage change that can happen. But generally, our moratorium is like, if I look at our different products, just give a sense of the moratorium. In home loan, for example, we have given a moratorium of 52% by value. And in business loans, which you call LAP, we have given 56% moratorium. So our moratorium, all in all, would be closer to 60% when you put all the products together. And since we deal with small tickets, we did feel that moratorium would be a good thing for customers, because that gives him the cash flow benefit for now. We didn't want to stretch the customers. Of course, commercial vehicle moratorium is slightly higher than this. That is because hardly any trucks were in operation. They work on simply, they get the cash for running the trucks. They pay the banks. I mean, it is simple as that. So that is where we are on the moratorium. In March, we have taken NPA, March month itself. We have taken an NPA of 43 crores, but took benefit of the asset classification on 89 crores. Why we took that 42 crore is, we went account by account to check which are the accounts that we felt was not possible to, because it was an account where we felt that only recovery proceedings will work whenever moratorium ends. So rather that we take it as NPA. But in other cases where customers were habitual late payers and we had a very good track record in terms of the customer repaying us, so we took moratorium asset classification benefit on 89.3 crores. On that we provided entire 10%. Over and above that, we provided about 53 crores for the specific the COVID package provision, which we call. And we estimated, and we believe both these provisions put together is ahead of what is required by RBI at this stage. Other than that, the business has been very tough since March 15. A lot of our energies have gone in keeping employees and staff safe, somehow coordinating from home, except for treasury. Some of the head office people like myself, clearing, some staff in product team, almost, and then the entire branch team. Everyone else is working from home, and we have enabled them to work from home, and we have put tracking mechanism to make sure that we are able to task the people even if they are working from home and deliver the results. Of course, it's not as easy as them coming to office, but still we have learned a lot of tricks in the last 2 months to make people, even if they are at home, track them and track their performance. The other good thing that has happened, which I would say, is that during this period, we were able to generate, that is from April and May so far, we have generated almost close to 800 crores of retail term deposits and replaced a lot of our bulk deposits. And we also got some refinance from NHB, SIDB kind of refinance. So that improved our deposit profile further. We have been well above 100% on LCR almost every day. In fact, we have been very well above LCR. We said we were at 132% in March. I don't remember the LCR going too much below that in single day, because that is something that we are tracking. We have maintained excess liquidity far in excess of what we normally maintain. So liquidity, touchwood, has not been a challenge for us. Of course, keeping excess liquidity comes at a cost of 4-5 basis point NIM. But I think during this time, that is the right thing to do. Now what I will do is, if you can please look at the investor presentation. I have made a few slides on COVID impact. I request you all to go to that slide. It is, I think, page 18. If you can refer to page 18, which is the COVID impact, then go to page 19. We have put a very quick commentary, nothing that you do not know. As of now, of course, economic activity is significantly impacted, and what is also problematic is that there is a lot of disruption of labor and supply chain. Some of the shops known to us in Karol Bagh, they opened about 2-3 days ago, but promptly shut down because they felt that there are hardly any customers and there is hardly any supply. So they thought, why don't we wait for things to improve further before spending the money or opening the shop. We think that economic activity will slowly come back in some ways, but it may take 3-6 months. We think a lot of the shops and establishments may take almost about 3-4 months for them to become really cash positive, because they also have to kind of reorganize themselves. As we speak, our credit team is speaking to each and every customer. Not that we didn't speak to them, but we have been speaking on collection call, but we are doing a detailed understanding of each and every customer, over 60,000 of them, collecting data on what exactly is happening, what is the situation. Some of the news is very encouraging because there is a lot of confidence saying that once the lockdown gets over, they are confident that over a period of time their business will revive. I mean, there is a confidence that at least 60-70% of the customers have expressed, which is very heartening to us. But again, we have to see how that goes. We will, of course, look at our credit policies once again. And in the near term, our intention is to preserve capital, manage the portfolio stress, reduce cost, and I will explain that a little later, and obviously maintain adequate liquidity. I've also tried to give you some color on business volume impact, which is page number 20. Page number 20, I'm saying CASA. CASA has been up and down because we find a lot of businessmen and SMEs using their CASA to meet their expenses during lockdown, paying some wages and things like that. So it's been not a great story there. There has been no great outflow, but there has been usage of CASA. Retail term deposit has been a fantastic story. We also launched a product called Zippy, rather relaunched a product called Zippy. Sitting on your desktop in about 3 to 5 minutes, with just your Aadhaar card and PAN card and phone number, you can create a deposit in DCB Bank. It has some glitches here and there, but it is working quite well and we are getting decent volumes on that. Long-term refinance, given the quality of our portfolio and given that it is SME, given that it is small ticket, we get a lot of refinance. The details are there in press release as well as to what is our refinance. Some people ask, why didn't you grow your deposits? I say, I want to grow deposits to an extent where I'm having refinance. I don't need to grow the deposits. And during the whole of last year and slightly over the previous year, we have been replacing a lot of bulk deposits. Touchwood, during March and during this COVID time, we never faced any liquidity challenges. When it comes to business loans, negligible growth except for gold loan. There is some demand for gold loan. Again, we have to be careful from health and safety point of view of staff, customer and so on, but some amount of gold loan we are doing. Corporate bank, there are select opportunities which we are pursuing as we normally do. We think that agri retail will immediately start after lockdown, whereas tractor finance also should be quite okay. At least maybe 60-70% of the volume should come back. That is our feel. But BC MFI loans are pretty much on a standstill at this point in time. When I look at financial impact, what I see during this lockdown, well, net interest income is likely to be stable only because we are on moratorium. The loan book will be stable. And we think that some demand will pick up only after the lockdown starts to ease up a bit. Fee income is a bit of a challenge because ATM fee as per law we cannot charge beyond a particular level. CASA related AQB charges we cannot charge. Since there are hardly any movement, then penal charges, processing fee, insurance that we have an attachment for loan, all these are important components, and those are pretty much not there because we have hardly done any loans in these 1.5 months. Net interest margin, we expect it to be stable, but over a period of time, if some NPAs increase, it may impact. Also, we are keeping excess liquidity, so that might have some impact on our NIMs. On staff cost, we have taken a call to delay new hiring and replacement. Already, as compared to what we ended in March because of resignations and so on, we are already down by about 100 headcount. So, intention would be to continue to maintain a very tight control over the staff cost, and we have a little bit of advantage where we may not have to pay the variable or accrue the variable pay, which is also a component of our salary cost. As far as operating costs are concerned, variable costs are definitely getting saved. Travel costs, for example, is getting saved. Any connector payout, DSA costs are getting saved. Some amount of processing charges like, valuation, legal, that is getting saved. So we will see how it goes. As of now, we don't have enough data points to see what exactly will happen, but it does appear that there will be some saves there. NPA provisions, we'll have to see what happens after moratorium. And as far as recovery upgrade is concerned, even in March, we missed out on at least about 12 to 15 crore of recovery upgrade, which was very much in the pipeline, but we just couldn't complete it because of the restrictions. So this may be a little slow. Our bank has been very good in recovery and upgrades in the past, almost 50-55% of the thing. But what I want to tell you is that all the customer conversations that we are having in collections leads me to indicate that while there is distress amongst customers, but there is a lot of keenness to work with the bank to move forward. So that's quite encouraging for us. Coming to the bank's strength, and unfortunately some of the analysts have missed out on some of the strengths that the bank has, and we feel very confident. Our operating profit is 700 crore plus, and we have cost flexibility. Not all our cost is variable, but not all our cost is fixed either. So we have cost flexibility. And if you look at our capital adequacy, we ended at 13.9%. And more importantly, look at the usage of risk-weighted assets. We hardly have used about 4-5% of assets. So it looks like if you add 100 rupees of loan, we probably may not use even 7% or something like that. That's the kind of capital efficiency that we have in our model. If you look at our margin of safety, which is operating profit divided by provision, even after including 63 crores of COVID provision, it is 2.9 times provision. If you exclude that, because that's a one-off event perhaps, it's 3.8x, which is a pretty strong operating profit margin of safety. If you look at our underlying provisions, without including COVID-19 provision, it is at 53.5%. Our loss given default generally in mortgage hasn't been more than 15-20%, even in some of the large ticket cases, which anyway we don't have too many. If I look at deposits and liquidity, continuously we are reducing the top 20. It is at 9.07. We are confident that step by step this will keep coming down. I had committed that in 2 years we will bring it down to 5%. We think even now we are very confident that that could happen. LCR has been well above 100%. We don't have any reliance on certificate deposits at all. Hardly. We have never run this bank on certificate of deposits. In fact, probably today, as of today, it may be less than 100 crores in our balance sheet. And of course, the quality of our portfolio and the segments that we operate allows us to access all the refinance facilities, SIDBI, NABARD, and NHB. Portfolio diversified and secured, granular. And I will show you how granular it is a little in another slide. But 35 lakhs is kind of average, low LTVs. It is self-occupied residential or commercial property. And top 20 loans percentage is just 5.3%. Right? We don't have big ticket loans, not too many. That is why our SMA1, SMA2 is hardly any number, and it's very stable. Low loss given default, I talked about it. We have a very experienced in-house collections team and strong customer connect, both by credit and by From a management point of view, the top team continuity is stability. In 2009, we all joined hands. At the time, we were facing a different kind of challenge. The same team, 99% of the team is the same team which is operating today, which understands what needs to be done and responds to each other to move it forward. Our expertise on product and segment, especially in the self-employed segment, our demonstrated control over NPA, and frontline staff strength and flexibility. If I tell you that our operations people who are sitting in Chennai in centralized operations delivered 35 retail term deposits for us in the last 7 days, you will not believe that, but that is true. We are trying to train everybody in this time to see what can they contribute for the bank to move forward, because they have nothing to do. If they don't have volumes, they can do something for the bank to move it forward. And of course, excellent analytical capability and digital capability. We relaunched our mobile banking, and I think we got a rating of 4.8 in Android, which is pretty good. Moving forward, our near-term focus is going to be manage portfolio stress and potential risk, continuously engage with customers and provide relief within regulatory guidelines. We intend to use the government guaranteed scheme to see what are the various customers who are the various customers we can help with. Actively reduce costs and accelerate our digital agenda, which we probably might increase our headcount in technology during this time to try and see if we can accelerate some of the things. I talked about retail deposit momentum that will continue, and generate whatever fee we can through phone banking and digital channels, and wherever possible disburse new loans. This is our focus. My last slide, and then we can take questions. There has been a lot of discussion on our mortgage portfolio. I want to throw some light on that so that you put it in the right perspective. Okay. Somewhere it is felt that salaried customers are safer than self-employed customers. Salaried customer may be safer for now, maybe in the COVID time. But I do know there are companies whose CEOs or CFOs are known to me what type of moves they are considering in terms of reducing their cost. A bank has an advantage of balance sheet, so they can reduce their costs, they can pace reduction of their costs. But companies who are fully sales companies, what will they do? They are incurring costs for the loss. So self-employed is not a bad segment. Self-employed, I have a lot of belief. They have a lot of resilience. In India, self-employed is the bloodline of the country, and I think they are key to generating employment. So we still completely believe in self-employed segment, and we are confident they will bounce back in due course. But looking at our portfolio, 38% of our loans are home loans, 62% is loan against property. Within that, salaried in home loan is 21% and self-employed is 79%. In business loan, 90% is self-employed, obviously. Moratorium by value, I mentioned, 52% in home loans and 56% in business loans. This is after we gave them opt-out, which means we offered the moratorium to everyone. Okay. If you look at the EMI collected, we are tracking this. EMI collected means whatever EMIs are billed every month, that and what is the collection. You see, in April, we have already collected 56.9% in home loans and 52% almost in business loans. This is data from collections. Average LTV, please pay attention to this. Average LTV, 49% in home loans, 37% in business loans. What does it tell you? There is so much of customer equity in this property, and that next line is far more important. Self-occupied residential commercial is 87%. Customer has so much of equity in the loan. Now there are two aspects to it. One, he is not likely to default because he will lose his home. Two, we have the flexibility to give him top up wherever possible to help the customer to nurture the loan, nurture the business back. Look at the flexibility that we have, right? If you look at the ticket size, 17 lakhs, 20 lakhs. And when you look at how many of them are leveraged, 35% in home loans don't have any outside debt as per our bureau scrub. That number is 30% in business loans. Less than 10% of our sanctioned amount, 23% of them don't have more than 10%, less than 10% of exposure outside our bank. Those numbers tell you that these customers are not too much leveraged and the bank has flexibility in order to support them as and when required, plus the government scheme. So yes, things are not easy. Post-moratorium, there could be a lot of action on how things pan out, but we are prepared. So those are the things that I wanted to share with you. I am ready for questions.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of...
Go ahead.
A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. We take the first question from the line of Renish from ICICI. Renish Patel from ICICI Securities. Please go ahead.
Yeah, hi. Thank you, sir, for such a detailed presentation. Sir, one question is on the deposit rate. So as you has rightly highlighted that, the retail term deposit has been tracking really well. So do we plan to reduce our rate, which is still, on the higher side at about 10%, where most of the industry players are around 6%. So do you feel there is a scope for a further deposit rate cut that could actually support our name in this uncertain period?
I have a question for you. I was going through some paper that you had written. Yeah. So why do you feel that we have a weak deposits portfolio? That is what is mentioned in your report. I want you to explain to me what you think about that.
Sir, that's basically the difference what we pay and what some of your peer banks are paying in terms of the deposit rate. So fixed deposit rate for us is significantly higher than what...
It is not significantly higher. See, let me explain to you. Unfortunately, and I have mentioned this even before, lot of times simply looking at some CASA ratio makes you believe that it is a good deposit franchise. I'm not saying you do that, but I've heard these kind of remarks. I know reliably that certain banks which had shown remarkable growth in CASA struggled in by paying higher rate of interest. It shows as though you are building a low cost deposit, but that is not the case. Okay, point 1 I want to tell you. Point 2, deposit has got 2 costs. The interest rate that you pay for that deposit, and the secondly, the cost of maintaining and administering the deposit. CASA, even after using mobile banking and internet banking, it is sometimes can be far more expensive depending upon the size of deposit than a term deposit where you may be paying 25, 40 basis points. Third, our stated strategy was to continuously work on reducing bulk deposit and replacing it with retail deposits. If I have to attract retail deposits, then I have to give it a little bit of a increased rate so that the marketing efforts that we do helps us to get those deposits. And if you see, systematically, more than 100 basis points we have reduced on deposit over the last 3-4 months. You can track our deposit rates in the website. So I just want you guys to get your data pretty much clear. And May 7th or something, we again dropped our deposit. Our bulk deposit rates have been dropping significantly over the last 3-4 months. Even when people were thinking that the liquidity is so important, we kept dropping our bulk deposit rate. I would rather pay slightly more to a smaller ticket deposit than be at the mercy of some bulk deposit whose price and quantity is completely unpredictable. So please understand our strategy. Our cost will come down of administering these deposits because we don't believe that unnecessary growing CASA, which is meaningless. Rather, we want to focus on quality CASA like GEM CASA or some open banking CASA or CMS kind of CASA, rather than just get a lot of CASA through the door. That's why we focus on term deposit. And many of the term deposit customers are opening CASA accounts with us after they come as term deposit.
Right, sir. So absolutely. So in that note, we have actually looked at the term deposit rate rather than looking at CASA.
Which is wrong is what I'm saying. You have to do a complete analysis. So you can talk to us, we can explain our strategy. Because these notes are being read by people, and when a simple remark saying that weak deposit franchise, if it was a weak deposit franchise, how did we grow 51% retail term deposits? Weak deposit franchise doesn't grow. Weak deposit franchise don't run around helter-skelter for deposits during March. We never ran around for deposit during March.
Right, I think we'll discuss separately, sir.
To answer your question, deposit rates are coming down and will come down. Yesterday, the rates were reduced by 40 basis points by governor. So we will relook at our ALCO and see how to reduce the deposit rate. But I will tell you, we will always keep our retail term deposits higher than some of the key competition, because we want to continue to attract customers and we find it in total cost more effective.
Okay, sir. Okay, sir. Yeah.
Thank you. We take the next question from the line of Darpan Shah from HDFC Securities. Please go ahead.
Yeah, so thanks for the opportunity. So very good disclosures on the LAP portfolio. If you can highlight some more details, similar details in the MSME portfolio, which is 11-12% of our book.
The LAP portfolio and MSME portfolio is very similar. In fact, part of the MSME portfolio has got what's it called CCOD. Probably 33-40% of that would be CCOD. The customer profile is similar. The property that we take for that is similar. The tenor, when you give a term loan, the tenor may be shorter than loan against property, and the valuation of the business or the estimation of requirement is very, very similar. Except that many customers or most customers in SME would get operating account. And at least 60-70% of them would be sole operating account with us. They have an operating account somewhere else, they will close that account and only maintain our account. So that is how that. The additional information we have on that portfolio is, we also, at least for part of the portfolio, also get to see their sales, the sales that goes into their account, the throughput.
Okay. So what will be the moratorium in this portfolio, folks?
Slightly higher than LAP portfolio, probably closer to 60-odd%. Again, it depends whether it is a term loan or CCOD, etc.
Okay. And so you mentioned about using the benefits of the government's MSME scheme. If you can throw some more light there also.
See, the full scheme is not completely available to us. We have understood whatever has been published. There is a registration process for financial institutions, so we are pursuing that product. We got our board approval, so we'll be pursuing that. It's on prima facie, it seems like a very simple thing that you give some loan to the customer and give some moratorium and then recover the loan over the next 3 years or so. And if there is any default on that part, and we can only charge 9.25%, we are fine with 9.25%. Provided, of course, if the cost of funds starts to gallop after 1 or 2 years, that may be a challenge. But at the moment, it seems okay to us. And we understand our customer needs, so we will create our own internal credit policy, reach out to customers who are needing this loan and deliver. And I also told you that a lot of our customers are sole banking with us, so we should have some advantage over there.
Okay, that's it from my answer. I'll come in the queue if I have any more questions.
Sure.
Thank you.
Thank you. Next question is from the line of Jay Mundra from B&K Securities. Please go on.
Yeah, hi sir. Thanks for the presentation, sir. Just two questions, sir. One is, sir, if you can quantify the total overdue loan as of, let's say, Feb end or March end.
What does total overdue loan mean?
So total overdue loans would mean, sir, all SMA 0, 1, 2, wherein if you were to take the conservative view of the RBI circular, you may have to provide so the RBI circular says 5% only on SMA 2, which I believe you have done. But the total overdue loans as of Feb end or March end.
So that number is not something that we are making it public. All I am telling you is that on the 89 crore that we took benefit on various products, we provided 10%. On the balance, we have estimated about 53 or 54 crores of provision. And we have taken our statutory auditors through the entire working for them to say that they are happy with that provision that we have made and it complies with the RBI circular. In my personal view, management personal view, this is higher than what RBI provision was expected.
Sure, sir. And sir, in this MSME guarantee scheme, as you said, the fine details are not out yet. But do you think the LAP portfolio as well as your CV portfolio would be included in the MSME definition?
So, while this is not a number that is, I can't give you an accurate number, but in my estimate, we are always higher in PSL than 40% and we get PSLC income. Much of that income comes because we are always ahead on MSME lending. We are a bank which is SME and MSME segment and lending. So, most of our customers in business loan, almost all customers in our SME and almost all customers in our CV portfolio, if possible, would be eligible for this facility.
Sure. So including LAP, right? Or you mean
LAP is a business loan. LAP is not a personal loan. LAP is a business loan. That's why I've written in that chart, it is business loan bracket LAP because market thinks it is LAP. We, in our the thing, call it business loan and it is given to MSMEs and it qualifies as MSME loans.
Sure, sir. So, a large portion of your total loan book in the form of LAP, MSME, SME and CV book?
Yes.
That's right. Okay. And home loan will
qualify for this benefit.
Sure, sir. And last thing, sir, if you can provide some directionally and some quantitative thing on the deposit, maybe after the March, maybe April end, if you can give that number. A lot of banks have given the position.
So let me give you an example. There is hardly any loan growth for the last 45 days. I have explained that in one of the chart on COVID impact. Right? Some corporate loans we are giving, some gold loan we are giving. Some repayments are obviously coming from non-moratorium customers. Now, why would I want to build my deposit base and increase my cost? So, I will maintain my deposit base. But what I am doing is, I am replacing a lot of the top 20, top 50, top 100 deposits with retail term deposits and refinance. So, we are basically improving the deposit profile. In the last 45 days, we are much better on deposit profile, which is why I said 9.07 is the May 20 top 20 deposit versus 9.27 on March 31st, 2020. So that is where we are. We have no difficulty in getting retail deposit in the last 45 days.
Sure, sir. And so just lastly...
And consciously, we are letting go of bulk deposits. We have already lowered our rate. The gentleman before that asked why the rate are not there. We have dropped the bulk deposit rates to make it as unattractive as possible.
Sure, sir. And just, sir, because now the moratorium has been extended by 3 more months.
Yes.
Do you think of course you had initiated a reach out program, but is it do you think is it fairly understood by the underlying borrower that that this is just a moratorium? Because there was some guys saying that it may be difficult for some section of borrowers to understand that this is not a waiver and a moratorium, and the interest implication.
It's a good question. As soon as moratorium was announced on March 27, there was a very senior FMCG person known to me. He called out and asked, this word forbearance has been used. Does it mean that I don't have to pay 3 months EMI? So I explained to him, forbearance, there is going to be no forbearance of the EMI. It just tells you that for next 3 months you don't have to pay. So there was a lot of misunderstanding even amongst, you see, outside banking we think people know banking, they may not know. So they ask questions and we should be patient with them. So we have reached out to all customers through our collections and explained what exact implication would be on the moratorium, what interest they will have to pay, etc. Whereby a lot of customers, when I say lot means not a significant number, but quite a lot actually withdrew their moratorium and said, don't worry, I want to continue to pay. If I need help, I'll come back to you later. That also happened. There are customers who have called us and said, all kinds of things have happened. The customers who have called back and said, I have paid, I am comfortable, but I feel comfortable if you return back the money because I want to stay on liquidity for a while. Is that okay? Is that okay? Give it. Some customers have said, I want the moratorium, but please apply this immediately. Don't return back my money. Apply it immediately after the moratorium is over. So we have dealt with all types of questions and doubts in the last 45 days with almost all customers.
Sure, sir. Thanks so much. I will come back.
Thank you. We take the next question from the line of Anand Lada from HDFC Mutual Fund. Please go ahead.
Can you hear me, sir?
Yes.
Sir, I just wanted to have some color, sir. By now, you could have reached out to all your customers across SME, CV, MFI, home loans. So, specifically on the small business segment, what are you hearing? Are they telling you that as the economy opens up, they do expect the business to come back to normalcy level? How much time does they take to come back to the Jan 20 business level? Do you think that can happen in Q3, Q4, or do you think the normalized growth will be only next year? First thing.
You are asking about my set of customers? Who are you asking this question about?
Sir, I just want to understand the ground level reality. So since you interacted with a lot of SME customers, so what your feel is when the business will return to normalcy? Do you think there will be a lot of business disruption?
Okay. So, frankly, nobody knows. Everybody is looking for answers. However, hopefully in about next 7 to 10 days, we would have done a complete survey of at least 50 to 60,000 of our customers by the same credit team who had done the personal discussion with them before giving the loan. So they are pretty familiar with these type of customers. So we will get some good answers. I'm not sure I'm going to give you all the answers of that. But day before yesterday when I was speaking to my credit head who had done part of the survey, he said that look, at least 60-70% of the customers feel that once lockdown is eased, in 2-3 months, they can come back to some level of business back is what they felt. Now, whether it will go to pre-COVID levels or 50% of pre-COVID levels, all these are guesses. Okay? Nobody has an answer to that. But customer confidence tells you that not all of them are desperate. Part of the customers feel that, yeah, they can bring back this thing.
Okay. Fine, sir. And sir, of the customer who has taken moratorium with you, what proportion of customers do they have a liability relationship with you?
I don't have that number offhand, but in SME business, a lot of them have liability. This thing on our lab, maybe 10 to 15% of them will have liability. This thing. Lot of the SME customers have taken have given us retail deposit during this moratorium period because they felt that they don't have any use of this money because there is hardly any business, so they just put the money in deposit.
Okay. So, try to assume customers who have taken morat still have seen increasing deposit balances with the bank.
Yeah, I mean, I'll tell you, this customer is not our customer, but he is a customer of some other bank. He came and said that he wants to put a deposit, and normally you ask for source of fund. He said that I have drawn down my credit limit from that bank and I'm giving you as a deposit. Now, these kind of transactions are also there, right? We took very good action on March 27th itself. We put a limit on all withdrawals from our CCOD accounts, whether it is corporate or SME. And we started monitoring every 5 lakh, 10 lakh transaction because we didn't want to be in a situation where suddenly they draw down the available limit and then they struggle to repay our loan. So we already put that control on March 27th or 29th, somewhere like that.
Perfect. And sir, with the fact now that there is another 3 months of moratorium, do you believe customers who are not taken first moratorium now they will also go and opt for a moratorium?
Don't know, boss. We'll see how it goes. It's too early to say. All these customers who wanted moratorium, we did it absolutely in the spirit of what RBI said, and we had a discussion with RBI, and we have given all of them options to have moratorium. We have reminded them twice, and what balance we have is after having reminded them on the moratorium.
And so if you permit me one last question. So on the cost side, on the other OpEx side, if I have to look at the large heads like rental cost or any other head, if you know, how much flexibility we have to control costs or one can expect a reduction in those costs?
Over a period of time, we have flexibility on all costs, including rentals. Okay. Because our initial discussion with certain large landlords leads us to believe that there is flexibility. Now, how well all this is panning out over the next few months, we will see. We believe that we have a lot of flexibility. We may not have a flexibility on depreciation of our technology because that already cost is incurred. We may not have the flexibility on depreciation of our branch assets. But anything that we are incurring on a regular basis, we believe we have flexibility.
So what proportion of the other costs will have that flexibility?
I think I've already mentioned that in our presentation. Take a look at it to say which are the costs. Like I'm saying, for example, a connector cost or a DSA cost, we have immediate flexibility. Valuer and legal cost, we have immediate flexibility. So each will have its own, characteristic.
Yes. So we have seen a fall in the OpEx, cost to income ratio for us. We still on the track to see that our cost income ratio has space to fall further, or now since it's the COVID event that agenda would get forwarded?
No, I think the agenda right now also I've explained what is our agenda of capital preservation and managing stress and reducing cost. That's our agenda. But remember, if we have some challenge on income, which may happen because of fee income not being there, for example, in processing fee, etc., then we have to find ways and means to at least offset some of it through cost. So that flexibility will happen.
Perfect, sir. Thank you, sir. That's from my side.
Thank you. We take the next question from the line of Sushmit Patodia from Motilal Oswal PMS. Please go ahead.
Hi, good afternoon, Murli and team.
Good afternoon.
How are you? I hope everyone is safe and healthy.
Yeah, so far so good.
So, Murli, wanted to check the 60% morat data point that you gave us. That is as on which date?
April.
End of April, right?
Yes.
Yeah. And thanks for that. And secondly,
March, May is March. There is no moratorium I mean, how to calculate a moratorium when the circular itself came on 27th and all PDCs were presented by 20th of March. So that can only be calculated for customers who call back in April and say, please return back by March 1. I mean, you know what I mean?
Yeah, but no, some banks did give us the March number. I don't know how.
March number would be very low for us. You know, I told you, in the spirit of RBI, we offered it to everybody.
Yeah. Just secondly, I wanted to check this extra 20% credit limit, assuming that the circular in details is also palatable. What do you think will be the end use? Will you be okay if a large part of the customers take that money and pay you back? I just wanted some...
So any customer who takes money and pays back, I'm very happy with that. That is a short answer. But the fact of the matter is, customers will have difficulty collecting their receivables from other customers. That is point one. If you see out of the 89 crore, I have done a sample of quite a lot of accounts there with collections. In many instances, customers are ready to pay, but his customer is in lockdown, he is in lockdown, and these are all, somebody told me, why don't you make it digital? Yeah, we can make it digital, but these are all cash customers. The guy is expecting in cash and paying in cash. So, those are the type of customers. So, I feel that we have to help those guys in overcoming the receivable challenge, number one. Number two, believe it or not, one customer called my collection guy and said, can you use your, because banker is allowed to travel anywhere, right? We are essential services, not anywhere, but we are allowed to travel. Yeah. So he said, can you use your pass and take me to my shop so that I can vacate my shop and take out all the goods, because I will be able to pay you by getting rid of that stock. You know what I mean? So, yeah. I think the funding will mostly go to helping them take care of their near-term cash issue, because they will be cash negative at this point in time, and which will be because they will not be receiving money from their customers, number one. And number two is to get some traction on stocks and so on. That is what, and our team is quite expert in finding out, or maybe they want to pay some laborers, because they want to keep the laborer. If they are in some technical business, they may want to keep the labor payment. So therefore, that also could be possible.
Right. And just following up on an earlier question, only is that while it may be very early to comment on the extended moratorium impact, but broadly looking back, would you say that the morat number goes up for you as we go into the next couple of months, or you think whoever had to take has already taken it?
I feel that majority have taken moratorium, and now that lockdown is actually easing, I really welcome this moratorium because people are clamoring for restructure. Yeah, restructure opportunity is already there for SME in as per the circular, and lot of customers approach banks for restructuring because they know about this circular and they say, listen, if you remember even in February, January, it's not that economy was buzzing. There were challenges in this thing. So customers were approaching banks for restructuring. So I feel this particular moratorium is at the right time, because as the lockdown starts to ease and as some cash flow starts to happen, the customer has a breathing time for him to, bring everything together. So I think it's good.
Yep. And just last question, Murli, is you just wrote a line in your presentation about fee income levers.
Yes.
Selling third-party products. Could you expand a little bit? And
which slide are you referring to so that I tell you the right thing? Are you talking about my COVID-19 presentation?
Yeah, I'll just tell you.
Yeah, generate fee income through digital channels.
Yeah. So if you could,
What has happened is, we are not able to sell any insurance product where medical is required.
Right.
That's not possible right now, because how do you convince anybody to do medical, and who will be ready to do medical at this time? So I don't think that's possible. But there's a lot of interest in health insurance. Right. So we are able to do assisted health insurance. So our trained certified phone banking people are able to call out, talk to the customer, and he agrees. Then we guide him through a portal of our third-party provider and complete the transaction all digitally. So we are able to do that quite well. Phone banking is doing it. Some other teams are also doing it, and that is true for even term assurance. We have a product called DCB Remit.
Right. Yeah, I saw that. Yeah.
DCB Remit is by far the most superior way in which you can remit funds abroad, up to $25,000. Just sitting on your desktop in about 5 minutes with just PAN card. You don't need to have a bank account of DCB Bank. You don't need. You can be any bank account. One customer in Punjab does a lot of remittance because they have, they have a lot of people in Canada. Okay, their favorite locations is Canada and Australia, right?
Yeah.
But there is a joke on that also. I'll tell you in a minute. So one customer went to a public sector bank. That public sector bank was equipped to do only deposits and withdrawals. So they said they can't do remittance. By chance, our RM met him. He said, we can do your remittance. We did a $400 or $500 remittance of that customer on remit to Canada. We got a sizable term deposit from that customer because of that service.
Oh.
Okay. But Canada students have been paid $2,000 by their government for COVID. So all of a sudden, India parents don't have to send any money apparently. So that's why that business
Are they sending money back?
Direct benefit transfer. So direct benefit transfer ho gaya. So that business was going on very well in April, but May many of the students got money. So
right. Okay. Just one last sorry, Murli, was that in mortgages, while the 6-month moratorium can be a little draconian for the borrower. So, are you monitoring FOIR also when you come to mortgages, and how are you? How
will the FOIR change on this?
The interest part gets accumulated, right?
Yeah, but he will get a tenor extension on that, right? Minimum 3 months, so he will get a tenor extension, or maybe it will actually go to 4 or 5 months, depending upon his interest rate. See, the 3 months can never be perfect 3 months, because if you capitalize the interest, it will definitely go beyond 3 months, 4 months, like that. That is how we explain to the customer, saying that you will be paying this loan longer. Do you want to take it or not? That way.
Okay. All right. Thank you.
Yeah.
Best of luck.
Yeah, thanks.
Thank you. We take the next question from the line of Roshan Churki from ICICI Prudential Mutual Fund. Please go ahead.
Yeah, thanks for taking my questions. Firstly, when you mentioned about the SMA number, are you referring only to greater than 5 crore ticket loans?
Which SMA number I refer to?
I mean, qualitatively, you mentioned that SMA number is low.
Yes. We report an SMA number to RBI on a monthly basis. SMA 012. And that is 5 crore and above. That number in the last 24 months, if any, would have got better, but has never gone out of hand for us.
And if we take the less than 5 crore ticket loans, what would that number
be? That will be portfolio by portfolio, and those numbers we don't disclose. And frankly,
qualitatively, if you can mention, what is it like?
No, frankly, I want to tell you that there is a difference between SME portfolio, that is self-employed portfolio, and salaried portfolio. In all these years of banking in Standard Chartered, Citi, I have found that the SMA 012 number would always be slightly higher for a self-employed than salaried customer, because of the cash flows that may be up and down for a SME, unlike a salaried customer. Point one. Point two is, as of December, we have compared our NPA numbers on various portfolios and SMA numbers on various portfolios with CIBIL data. We are either at private banking industry level or better in some cases, barring one or two what you call as sub-segments.
Okay. And what percentage of our customers who have outside liabilities more than 20% of our sanctioned amount have sought moratorium?
I don't have that data. We can't disclose all that data to you guys. We give you some color so that you have an idea about our portfolio. If some other bank is disclosing that, tell me. I will figure out what.
But at least if you can make a call, my intention.
I don't have an idea. I'm just telling you, because people keep on saying lap. They just keep thinking some ghost is sitting in lap. So I decided to give you guys some color on LAP and home.
Thank you so much for the disclosure, sir. It's very well appreciated.
Yes.
So, wanted to understand this bit. What are the kind of unutilized limits among SME and LAP customers?
LAP customer unutilized limit.
Okay, there will be term note, and I'm referring to the CCOD product.
CCOD unutilized limit would be, like average utilization would be like a 40% or something. That's all. Like barring a few, handful of customers who probably will be 60, 70% or 80%.
But at the portfolio level, how has the number moved?
It has not moved because we already restricted that as on March 27th or 29th. So it has not moved. We won't allow that to move because we don't want customer to use our CCOD to figure out his cash flow. So we want to be careful as to where he is using the money. For example, on 31st March, I saw one transaction where a customer is trying to buy a car with the CCOD. So we stopped it because of the restriction that we put.
Perfect. And with respect to the COVID provisions that we have made, how did we go about estimating this?
So we looked at our entire portfolio. We looked at the moratorium numbers. We used our analytics team. We looked at the payment behavior. Then we produced set of workings, gave it to our statutory auditors. They subjected that to their own analytics and review. And we answered all their questions in a satisfactory manner. And then we said, this is the provision, and they accepted it.
Okay. How are you thinking about the extension of 3-month moratorium that the RBI announced yesterday?
I welcome the moratorium extension, as I mentioned earlier in the call. But I feel that this has come at a very, very right time, apt time. There were two issues with the previous moratorium. One was that there was no forward indication as to if lockdown continues, then moratorium will continue. So people were anxious about it, which was resolved by the governor. Secondly, in CCOD account, it would not have been possible for customer to pay the entire interest immediately as per that circular in the first week of June. That also governor has clarified. Now that the cash flows are likely to improve, if lockdown improves, then the the moratorium actually helps him to manage his cash flows better.
Okay. And one last question, if I may, what proportion of our customers benefit because of this MSME program?
Like I said, who all will take, I don't know, and who all we will give, I don't know. But business loans, entire business loans is eligible. Commercial vehicle portfolio is eligible. SME, MSME portfolio is eligible. In some corporate who are less than 25 crore also may be eligible.
Thank you so much, sir.
Yeah.
Thank you. We take the next question from the line of Vignesh Shankar from TVS Capital. Please go ahead.
Good afternoon, Murli. Thank you for taking my questions.
Yeah, no problem.
First of all, let me compliment you on the extensive disclosures that you made. Excellent presentation.
Okay.
First question.
I hope I didn't add to the confusion that was already there for the last 40 days or so.
No, sir. I think you only clarified, so I can confidently say that. So my first question was on dispersals. What is the outlook on dispersals in Q1 and Q2, especially given the moratorium extension?
So Q1, let me tell you, supposing you tell me tomorrow, can you start disbursing home loan or business loan? My first question would be, because of lockdown, what is the impact on property prices, valuations, etc.? I suspect that there may be at least a 10% impact. Okay, number one. Number two, the second question is, our serviceability of loan has everything got to do with the sales number. What is the sales of this person? It has got disrupted in the last 2 months. So I don't know if some banks are confident of immediately starting. I don't think we are in a position we have to assess all this and check our credit policy and then only start moving. At the moment, looks like first quarter there may not be any action. I know some banks are disbursing personal loan and all. We are not into personal loans, so we are not disbursing anything. Gold loans we are disbursing. Some corporate loans we are disbursing. Some tractors we are disbursing. Some KCC loans we are disbursing. And some customers who have already taken home loans and are looking for a little bit of disbursal for completing the builder completing the work, that also we are disbursing. Other than that, first quarter doesn't look like a possibility. Second quarter, perhaps we'll see how the lockdown and all goes through. My worry also is, what if some spike happens on some infection and then again some more restrictions come? How to start? We need to have some certainty of operations before we can step forward.
Got it, sir. Sir, last question. What would be the outlook on branch rollout for FY21?
At the moment, physically it is impossible to roll out any branches. Even the branches that we have rolled out, about Bharat, how many? 7, 8, 10 branches? How many?
We did 8 in the year.
No. What happened to the branches? The work is held up, right?
10 to 12 branches is less than 1 month completion left.
Yeah, 10 to 12 branches. We are on standstill because half work is done. Lockdown, so we cannot complete that. So that we will complete as and when we have a chance. And then, suddenly we would have lost all the people that we have hired. All this drama would be there in that. So that's where we are. So at the moment, very difficult to say.
Got it, sir. Thank you so much, and best wishes for Q1. Thanks.
Thanks.
Thank you. Next question is from the line of MB Mahesh from Kotak Securities. Please go ahead.
Good afternoon, sir, and thanks a lot for the presentation.
Yeah.
So 2 questions from my side. One, if I were to just look at this provisioning number, let's say for the next 12 months to probably a little bit longer than that, because the impact of this might be extending for more than a couple of years. Given this background, how are you wanting to build your provisions on this particular line item? Do you say that, look, let's hold on and see the portfolio before we start building, or do you want to kind of make it a little bit ahead and start building for this expected losses that will come in?
Even pre-COVID times, we have always made provisions more than required by Reserve Bank of India. Point 1. Point 2, as of today, our floating provision is 100 crores. Even in this quarter, we have made about 2-3 crores of floating provision. And our floating provision stands at 100 or 102 crores as we speak. And you can compare with several other banks' balance sheet, whether they are making regular floating provision. I guess not. Okay. So the intention of management team and the guidance from the board is that we should stay ahead in terms of making provision. We can reverse the provision once the situation is more, the more clarity is on the situation. That's our intention.
Okay. And on the other question, on the restructuring circular that you had kind of indicated earlier, why is there so much reluctance for all banks to utilize this proposal, while we see a fair amount of bankers discussing this openly, asking for a one-time restructuring? But this proposal is already there in the public domain.
No. One-time restructuring, you don't have to downgrade. So you're talking about this circular which is valid till December 31st.
Yeah.
We like that circular. Actually, lot of customers in CV approached us in January and February, and we also encouraged our customers, because I have said in another call before that if a customer who has say 8,000 rupee load per day or something was actually getting 3,000-4,000 rupee load, which was not enough for him to pay the EMI of bank. So what happens in that circular is you have to take a 5% provision, and customer has to pay, I think, 2 or 3% of the principal for his portion. Okay. So we are not at all reluctant. In fact, I would say that wherever possible, as we move forward, customer wants a restructure, we will do that. The reason I say that is, in the government approved scheme, which is the 1+3 this thing, sometimes it may not be possible for customer to repay the entire loan in 3 years, because I think it is a little hefty in my view. Whereas in the normal loan, if you restructure, take the provision and reverse the interest, you can actually give maybe a little bit more longer tenor. So I don't have any problem with the restructure mechanism. It's a good mechanism.
Perfect. And just one final question. With 50% of your loan book sitting outside of metro, have you started seeing any material differences in the in your EMI collections out there?
See, first 30 days is no indication at all. Only now we are starting to see some, like for example, Delhi was opened 3-4 days ago. People are reporting a lot of traffic. Telangana, a lot of traffic was being reported. Now the airline is also going to start functioning. So the correct data would be what we see perhaps from now onwards. But accessibility of customer was far more easier in the smaller locations.
Perfect. Useful. Thanks a lot.
Thank you. Next question is from the line of Rahul Maheshwari from Ambit Asset Management. Please go ahead.
Good afternoon, sir. Hope all are doing well at your end. And very great detailed presentation on LAP. Two questions, sir. One, on LAP, can you give a color little bit on the floating rate and fixed rate between the home loan and LAP, and any chance of now the RBI is also focusing more on transmission. So on balance transfers going forward, any chances of balance transfer from your bank to the bigger banks and also from the NBFCs to the small private banks towards zero? So any such color or chain can you give on that part?
So the good news during the moratorium is the balance transfer out of our bank is very minimal. And frankly, how anyone will assess in a moratorium period as to which account to take and which account to take is difficult unless they decide that anyone who has been paying during the moratorium is a good guy. I don't want to make that conclusion because it may be possible that person has stretched his cash flows during the moratorium through his savings. That is also possible. Okay. So I would say that we expect loans to come from NBFCs and smaller companies to us because we have a competitive rate. Generally, small ticket LAP and small ticket home loan prefer a semi-fixed rate, which means for 1 year they want a fixed rate. After 1 year they move into EBLR, previously MCLR. So some part of our book is fixed rate for at least some period of time. And we are passing on the EBLR almost immediately as required by law. And MCLR changes we have been making consistently every month.
So on mortgage, sir, no doubt a precise number, but what is the range which is a semi-fixed and...
I don't have that number here. I don't have that number. I do know in smaller ticket like a home loan of say 12 lakhs will be fixed for 1 year. So as we speak, some would be 6 months fixed because that is all the part is that. Some who got booked in February would be still full year fixed.
Okay. And also, sir, in opening remarks, you had mentioned that we might go and look forward in more detail towards the credit policy. Looking at your customers, right from the CV, SME, LAP, any internal, how internal credit ratings or benchmarks are you using earlier and going forward, how much more strengthening you would be doing? Any some parameters or highlights you can make us give that how internal ratings are being done for a particular customer like CV or LAP as compared to how that rating is being taken by the external kind of...
Why don't I give you what we are doing and we hope that will really help us to understand how to manage our portfolio risk. Our analytics team has basically used 4 parameters: moratorium behavior,
yes,
type of industry, payment behavior with us, and payment behavior outside in the outside liability. So to repeat, payment behavior within us, payment behavior outside, that is in the bureau. Third, moratorium behavior. 4, type of industry that they are there, right? And certain weightages have been given for each of this. And we have tried to figure out how much of our portfolio would be requiring a lot more attention. That activity would get finished perhaps in about a week, 10 days. That will give us the idea on how to design our credit policies to pursue this, and if any repair is required of some of these customers, how to go about doing it. So we are working on it. Hopefully that will get completed in a week's time.
And also, sir, currently the customer mix which is there, how much is a little bit lower notch in terms of, I know for corporate
we don't book any loans below 700 score. We don't do that. Very handful of our customers are below 700 score. We have customers called 1+ or 1-, which means they don't have any bureau score. Those customers behave quite well. In our experience, customers below 700, whatever rate you charge doesn't seem to fit because their delinquencies and NPAs are high. So we don't do those customers at all. Yeah, customers may have, like when you go to smaller areas, customers may have no track record. In the sense, Mickey Mousing, we offered it to all. We are closer to 60 when we put together all the products. Some may be lower, some may be higher. That is how we are. And I have given you specific on home loan and what is our moratorium.
Yeah.
Okay. Then what is the other question? Fundraising you asked. Fundraising. We have no plans for raising any fund at the moment. We are at 13.9% Tier 1 capital plus another 3 point something for Tier 2, which is 17.75. It's a strong capital. Loan growth may be muted at least for first 2 quarters, so I don't see any reason. And if you are able to manage the P&L well, operating profit, if you are able to manage the operating profit, there may be some issue on income. We can save some cost. If you are able to manage operating profit in order to absorb any potential hits on provision, we will see how it goes in 1 or 2 quarters before we decide whether we need capital or not.
Okay. Sir, what about disbursed to the SMEs then?
Disbursed to SME?
Yeah.
Very minimal disbursal is happening to SME. Only existing customers drawing down line here and there, we are monitoring and giving them. Some existing home loan customers are drawing down. Some committed customers whose businesses are still okay, like an FMCG distributor or some grocery store, those kind of customers are still getting some disbursal. But all in all, very less.
Okay. Okay.
Great.
Thank you.
Thank you. Before we take the next question, a reminder to the participants again, please limit your question to 2 per participant as we have a long queue. We take the next question from the line of Prakash Kapadia from Money Portfolio Managers. Please go ahead.
Yeah. Hi, just 2 bookkeeping questions. Last year we were 6,100 odd employees. What is the number as on today? And, the other income has a contribution from PSL, sale of PSL. What was the number for the full year versus last year?
Full year PSLC income is 40 crores, just shy of 40 crores, few lakhs shy of 40 crores. Last year was 28 crores. Okay. And number of employees is...
We are at about 6,800. 6,800. But as we speak, all the resignations that we have not replaced, it's already down to 6,700 something.
Exact number is 6845.
Yeah, 6845. Currently, I think we are at closer to 6,700.
Understood. Fine. Thanks. All the best.
Okay.
Thank you. We take the next question from the line of Bunty Chawla from IDBI. Please go ahead.
Thank you, sir. Thank you for giving the opportunity. Just one question. As you already said that LAP part, which is almost self-employed 24%, is almost similar to SME business. So we can take roughly 35% of the portfolio comes from the SME. So if you can share some light, what are these SME businesses into different industry kind of a thing or different verticals?
We don't have that kind of data. First of all, let me tell you, self-employed, at this point in time, nobody can plan, no entity in the world can plan for an event like COVID. Self-employed segment across the world generates employment. They are very profitable. We have run a very profitable business on this all these years. Unfortunate that such a situation has developed. We are confident that over a period of time, yes, some customers may not make it, unfortunate, but we run a secured portfolio. We have self-occupied property of about 87%. Almost 80% of our customer base, wherever you touch, is self-employed. Self-employed, tractor is self-employed, KCC is self-employed. You talk about home loans, about 70% is self-employed. business loan, which is LAP, almost 90% is self-employed. So we do business with self-employed. We understand the segment very deeply. But we do small ticket self-employed. We don't do big tickets. We do average ticket of about 35 lakhs. In LAP, our ticket size has already dropped to 20 lakhs.
Thank you, sir. Lastly, on just slide NPA movement, the 150 crores, the fresh slippages in Q4 is, we have not considered 27th March approval. It's pure NPA which has happened during the quarter. Am I right?
In the month of March, we took 42 crores, including 10 crores of gold loan NPA. We didn't take the benefit of COVID on all items of March. We didn't take.
Okay, so it's a pure
89 crores, where as per our analytics and as per our collection feedback, we felt these customers are habitual delayed payers, and we have a very good opportunity for us to recover it at a later point in time. So only on that we took COVID benefit, and we provided 10% of that already.
Okay, can we say 150 crores slippages plus 89 crores with the COVID impact? Could be the total?
Wrong. Okay. 150 crore is the slippage on which we would have provided 15%, IRAC norm, this, that, everything is done on that.
Right.
Yeah. Only on 89, we have, as RBI allows, we have taken provision and we have kept the income on that.
Oh, okay. Thank you from my side. And best of luck.
Thank you. Next question is from the line of Harsh Desai from Vallum Capital. Please go ahead.
Yeah. Hi, so my question was, you said like your in terms of giving fresh loans, your focus products will be gold loans. So just want to understand your strategy there. Will they be in competition to like the gold loan NBFCs? Will the customer segment be the same? And like what will be the differentiating factor in trying to gain like market share from them is something I want to understand.
Yeah, market share वगैरह gain करने की कोई जरूरत ही नहीं है. Not required. There is enough gold loan business. There are enough gold loan customers. There is no business that is happening. Customers need some money. They need to take some money against gold. Usually, I may be wrong, but usually the portfolio that we have seen of NBFCs, the ticket sizes are far smaller than the ticket size we do. Our average ticket size will be like a lakh and a half, maybe 1.75 lakh, that type of ticket size. But I have seen NBFCs at 40,000-50,000 rupees ticket size as well. There is plenty of business to go by. NBFCs are very superior in terms of the cycle time. They probably can disburse a loan in half an hour or 1 hour. That is where the competition is, because if we take more time, then it becomes a problem. We don't have in-house valuer in all the branches, so sometimes there is a delay in getting the valuer. So we lose some business and we are trying to bridge that gap. But there is enough business to do for everybody.
Correct, sir. Sir, thanks. And my second question was with regarding the extension of the moratorium. The remaining 3-month extension will also be opt-out for all your customers. That was one part of it. And second, how do you think the credit culture of a borrower is affected when he doesn't pay, an EMI for 6 months per se? And how would the cost of the EMI affect him for supposing a LAP customer of yours, which is, a slightly higher ticket size? How would the cost accrue for him for 6 months, and how would that be distributed? Something around.
I think at the moment, customers would be thinking of how do I get my business back to some level of normalcy. They would be worried that they're very happy that the bank has given them moratorium. They would be worried that their loan has got extended by 3-4 months or some slight cost has gone up on this thing. When you explain to certain customers who feel that they don't need to pay because they have the money, they have repaid the installment. Currently, customers are all focused on how they can restart their business and how soon they can get to some level of normalcy. That's what the focus is. And if you ask, I know that the favorite discussion always is, financing is a problem for SMEs. I have a slightly different view on this. While financing may or may not be a problem, but many customers want infrastructure, support, less hassle from, agencies. Those are the kind of things that they require, which will ease their business. So I think currently they will be worried about how to get the business back on track, how to get back on their feet.
Correct, sir. Thank you, sir. And my last question, if I may. So the 20%, the additional limit that the government is giving, will you all be okay in terms of, the government guarantee, especially with the government's track record in terms of when they actually pay the guarantee amount and in that sense? So will you all be comfortable doing it?
19.5% of my book is in SLR. So if I can trust the government with 19.5%, I can trust the government with 20%.
Sure, sir. Okay, so that's it from my side. Thank you.
Thank you. Next question is from the line of Saurabh Chatterjee, individual investor. Please go ahead. Saurabh Chatterjee, your line is unmuted. Please go ahead. As there is no response from the current participant, we take the next question from Sagar Shah, Alphaline Wealth Advisors. Please go ahead.
Good afternoon, sir.
Yes.
I hope you're doing well.
Very well. Thank you very much, and I hope you are doing well too.
Yeah, absolutely. So, coming to your results, sir, I have just two questions actually. My first question was concerned regarding your asset quality. As I can see, almost 150 crore slippages in this March quarter. You haven't taken a benefit of around a COVID-19 package on the March slippage of around 43 crores, but still, I was really concerned if I was seeing the YOY growth in the GNPAs of each and every segment actually, especially mortgages. So, after these COVID times, do you plan to take some more risk undertaking measures so that we can at least predict better customers so that we can our asset quality actually remains fairly stable actually going up, because even if we have to sacrifice on our growth actually in the coming year.
So I don't believe that our mortgage portfolio or LAP portfolio has got any challenges. Last year has been a very difficult environment even prior to COVID. Our major challenges have been in commercial vehicles, and my understanding is that most players in the market have faced issues in commercial vehicles. We have hardly had any. So if I look at our mortgage portfolio as compared to the slippage versus recovery, it has performed quite reasonably, barring maybe one or two loans which may have been slightly large ticket loans, which anyway we don't do, but maybe historically whatever was there. So I won't too much worry about the mortgage portfolio. Commercial vehicle continues to be a challenge and may continue to be a challenge even in the coming the thing till economic activity picks up to some level. Regarding changes to credit policy, we have a full-fledged credit policy team and analytics team, and almost every month, 2 months, we make changes. If we notice any issues in the portfolio, we keep making those changes and translating those new policies and controls to the front line and to the sales team. So that's a continuous process.
But then why are we seeing almost a quarter-on-quarter deterioration in our asset quality if you are so confident, sir? Actually, if you compare...
If you look at it, the recoveries have been pretty good on mortgages, SME and all. The recoveries have not been good in commercial vehicles, because it's very tough to get the recovery till you really find some momentum in the business of the customer. Secondly, in quarter 3, we had a large ticket NPA, about 42 odd crores of a customer who has been with us for many years. And if I'm not mistaken, that was a very big ticket, and it took our NPA to almost 200 crores in third quarter. So, and the environment has been not very easy even prior to COVID. So there has been some slight deterioration in NPA.
Okay. So do we plan to at least scale down our CV portfolio or run down our CV portfolio in the coming years?
Vito CV portfolio, there is nothing to disburse. We have already scaled down our new CV portfolio and we were focusing on old, that is the used CV portfolio. That is why you will find in the last 6-7 months or even maybe longer, the portfolio was just static at one level. That is because the repayments were being just about met by new sales.
Okay. So, okay, my second question is regarding to our balance sheet growth actually. As our vision is to almost double our balance sheet almost in 3.5 years. But our balance sheet growth and also our actually loan growth, if you compare it from December to March pre-COVID, is almost flat actually. So, and this year's balance sheet growth is almost just 8%. So, are you still confident that we will still be able to double our balance sheet in the coming?
We will give a new set of guidelines on what we are aiming to grow, provided we get, because see, the whole dust has to settle down of COVID for us to figure out where, how, what segment, what product, what credit policy, what controls, what geography, a lot of things that we reconsidered once the dust settles down. Only then we can give you guidance on, whether, what rate at which we can grow. Currently, the focus, please read my slide on near-term focus. The landscape has changed completely. Completely changed. There is no way you can compare what we are facing today with some. Maruti reported 0 sales in 1 month. When was the last time you heard of that kind of situation? So I don't think it is fair to ask for a guidance from management team on doubling of the balance sheet in a situation like that.
Yeah, but what I was concerned is about even the loan growth actually quarter on quarter from December to March. I saw the loan growth hasn't increased actually.
Yeah. So
pre-COVID.
March, we decided not to disburse any loans after 12th of March or 13th of March. So a lot of our loans, March is usually a big month. There are at least, I would say, 400 to 500 crores of loans undisbursed because we just decided that this is not the right time to disburse the loans. It is better to just wait and see what happens in the market.
Rightly, sir, rightly. Thank you so much, sir. Yeah. I'll come back in if you have more questions.
Yeah.
Thank you.
Thank you.
Operator, we'll take 2 more questions from here.
Okay,
this will be the second last question.
Sure, sir. We take the question from the line of Mona Ketan from Rollout Capital.
Yeah, hi sir, good evening. So the existing MSME restructuring scheme, which has been extended till December 21, what is the, do we, have any portfolio under this scheme currently that has been restructured?
Yes. In January and February, we restructured, at the moment what we have is about 130 odd crores of CV, about 43 crores of MSME, and about 43 crores of mortgage and about 10 crores of corporate. Corporate is also MSME only, but it is in corporate. That is why it is, but it is an MSME account. And what happened is after the previous announcement by the FM, there has been quite a lot of demand by many customers who were servicing their loans but were having some struggle in terms of their sales, receivable and so on, and who approached bank for restructuring. I personally think it's a very good scheme where you collect some money, make sure the account is standard, collect some installment and work around the customer's new cash flows and restructure the loan and take 5% provision straight away.
Sure. So the press release that mentions about 237 crore of restructuring, that is all under, that is all under this.
Yes, only under that, nothing else we do.
Okay, and this was all done this quarter itself?
I'm not sure. It had some, a lot of CV portfolio was done in January, February. March, of course, it doesn't make any sense to restructure and all because it was a very different situation.
Sure. And on the CV book, which is about 7% of your loans, could you just throw some light around what exactly are we into? Small transport operators or individuals?
FTB, FTU, small operator with 3-4 vehicles, people who customers who get contracts from larger fleet operators. Those are the kind of segments that we are in.
Okay. And a lot of these segments in that case will not be driver dependent.
Many of them will be driver themselves for one vehicle and have 2 other vehicle or 3 vehicles like that.
Okay. No, because we are hearing that, segments that are not driver dependent have still been able to open up because they are not facing migrant issues. So is that the same situation at your end of borrowers as well?
So what I want to say is that there is no perfect database of information that is flowing on this COVID as to what is happening on the ground. There is some information comes like that, some information. All we know is when we speak to our customer base, there is fair amount of disruption in labor.
Mm-hmm.
So, for example, just to give you a sense, not necessarily of CV, we are allowed in our building to walk in the deck area since last 15 days. Some relaxation has happened. Otherwise, we were just cooped up in our house. So we were allowed to walk. In that, only yesterday, last week I heard an SME customer talking to another person saying that his labor is unlikely to return only after rains they are likely to return because now all of them have gone. They are unlikely to return. So he said, well, how do I restart my operation? It's very anecdotal data. But one thing is clear, there is disruption.
Sure. And on the CASA portfolio, there has been a decline both sequentially and year on year. So could you just, throw some light there?
Yeah. So our focus is purely on retail term deposit small ticket. Our average ticket size on retail term deposit about 1.5 to 2 lakhs. Okay. For many years, we pursued CASA quite well. We used to grow CASA by about 15-18%. We have 2 problems with CASA as compared to some of the larger banks like SBI or ICICI and all. What we find is that our CASA growth is not enough to fund our loan growth, because supposing our CASA growth is only 1,500 crores and we want to grow by 3,000 crores, we don't have enough funding. We end up taking some bulk deposits, and that kind of distorts the ratio of your liquidity profile. We changed all that about 2 years ago. We started saying first the customers retail term deposit you get, and then you get the CASA customers. Okay, so that is how we are operating, and we believe that in the overall cost, our branch cost would certainly come down in about 2-3 years, because the cost of servicing a CASA, even with digital channel, is far higher in our view as compared to a retail term deposit where there is hardly any this thing, and cross-sell opportunities are in fact better because retail term deposit guys are slightly more, I would say, advanced in their capability to buy products. Okay. Second point is, we actively started leaving out any bulk CASA, which means that we never wanted to match the pricing of other banks and so on. So some of the CASA we actively let go as part of reducing our top 20 deposits.
Okay. And does it have to do anything with some of these large state government deposits that were
We have very limited reliance on state government deposits of any other thing. Across India, we have chotu deposits of state government. We may have seen a little bit of outflow here and there and all, but we never relied on our. And frankly, if you have those deposits on SA or CA, you can't build a balance sheet on that because those tend to be very erratic. Suddenly a project happens, they will withdraw some 15 crores for that project. You can't depend on that flow. So we never built our balance sheet on that. So we don't have any worries on that count.
Sure. And lastly, if I could have the breakup of your provisions of 118 crores this quarter.
Okay. NPA and aging provision is 45 crores. COVID moratorium and asset classification benefit we spoke about 9 crores. COVID moratorium related other than asset classification benefit 54 crores. Standard asset provisions, which is RBI mandated 10 crores. We continue to add to floating provision. We added 3 crores more and taking the balance to 96 crores. And we reversed out investment. We had excess provision on SRs, which got reversed out 3 crores. So net 118 crores.
Thank you.
Last question, operator.
Sure, sir. We take the last question from Ravi Naredi from Naredi Investment. Please go ahead.
Mr. Murli, you are doing very fine. My point is that why not we giving much stress to gold loan where we are 100% safe and demand in the community is very high?
Yeah, I tend to agree with you, but I'll tell you, everything has some plus and minus in it. The branch capacity has to be directed to whatever strategies that we are pursuing. For example, if I want the branch capacity to be fully focused on getting me retail term deposit and have as much granular deposit, I have to skew the scorecard towards that. If I want fee income, then I have to give some weightage to it. If I want some gold loan, so it all depends on what kind of, supposing I change the weight to gold, it may so happen that they may not deliver on something else. So it's a fine balance that we have to achieve or provide them with more resources. Why gold loan companies are able to do higher volumes is because their branches do nothing else or mostly nothing else other than gold loans. And they do in-house valuation. So it's a good point, and we believe that in this lockdown period, there is opportunity, and hopefully we will pursue that.
Yes, because what I think it is since it is 100% safe and bank is safe and you get good interest and everything, so you may depute 1-2% separately for gold purpose and you can manage accordingly. That's my request.
Yeah, absolutely. And we may not have to specifically dedicate. We may just have to change the scorecards appropriately.
Yes. Thank you and all the best, sir.
Thank you everyone for, I'm sorry I took a lot of time. It's almost 2 hours that I've been talking and you've been listening. Thank you very much. Look forward to engaging with you again next quarter. Thank you.